Hi everyone, welcome to 见面Lite. This online program is created by Wall Street CN, and this special episode is also presented jointly with CITIC Press Corporation. My name is Ni from Wall Street CN, your host today. I am so glad to see you again on 见面Lite. So last time we discussed how to respond to the upheavals with Jonathan Brill, author of Rogue Waves. Then I have been thinking a lot recently about how can we expect the world to evolve in terms of demographics, economics, and technology and beyond, so as to get a clear view of it, and also what are the most important things or trends that we need to know about the future so that we will be able to prepare ourselves for the future. Today, we're going to dive in and talk about the super trends and also the investment and the business opportunities for the next decade. Still, do not hesitate to leave any comments or questions in the chat box below, and we will pick some of the questions to get answered. And also welcome to share with 见面Lite to your friends if you are interested in today's topic. We are so honored to have our guest, Lars Tvede, with us to take a look into the future and discover the trends that are shaping our world and that matter to our investment decisions. Hi, Lars. How are you today?
I'm very good. Thank you. How are you?
Yeah, great. So please say hi to our Chinese audience. They're so excited to meeting you.
we're spanning the world here because we have producers in China. You're in the US, right? I'm in Switzerland.
Yeah, cool. So
I'm
I
the
would
lucky
love
one because we're doing this at a nice time for me.
Thank you so much. I would love to introduce a little bit of our guest to you. So Lars is not only the author of this bestseller book called Super Trends, the 50 Things You Need to Know About the Future, which, by the way, I really think this book is fantastic, and you can buy it both online and in bookstores. And he is also the author of the other 17 books, which have been published in 11 languages and 60 editions. And I would mention that he is also an award-winning serial entrepreneur, a successful financial investor, and also he is an engineer and economist himself. So please tell us more about yourself, because I know you have many business and also you launched a hedge fund, right?
Yeah, that's right. So as we talked a bit before this presentation here. So we're going to cover quite a span, because if we look at the last 5 years, I've launched 4 different companies. A real estate company in Germany, but then a venture capital fund, and a hedge fund, and this forecasting company called Super Trends. And then I'm writing books, so it's a little bit all over the place. But the common theme, which you see in some of my books, like Super Trends and the Creative Society, which is also out in Chinese, by the way, is I'm very interested in the future, and it's both the long-term trends in technology and the long-term trends in demographics, economic growth, etc. But I'm also interested in what happens in the investment markets in the shorter term. We're going to talk about the big themes, but also about what I like to invest in right now. Just about the venture capital fund, we founded it in 2016 and finished launching the first fund in 2017, and invested we invested in 22 different startup companies, and we are up more than 10 times, so more than 1,000% profit after these years. Then I launched the hedge fund last year, and that's been harder. So unfortunately, we invested quite a lot in Russia because we believe very much in commodities. And our equities in Russia, which are invested in through American and European ETFs, do not trade. So they have a huge value. So if we count in this value, we are down 7%. So one fund up about 1,000%, another one down 7%. But we actually cannot trade those Russian shares. So excluding these, we are down more than 20% right now. But the market is full of opportunity, and I'll come to that, because there's so much negativity, and that's normally when you need to invest. Turning to the company called Super Trends. Super Trends is a forecasting company, and what we're interested in Super Trends is very much what is not covered so well in media. So here we have a graph that shows the American real GDP per capita for since 1770. And what you can see is, so the vertical scale is logarithmic, it's GDP per capita. And what you can see there is that the actual GDP per capita goes up and down a lot, but it always comes back to this underlying trend, which is actually exponential. And that underlying trend is created by innovation. And you have something similar in most parts of the world, including China. It's just steeper in China. So it's really innovation that drives the world. And this is not super well understood. It's not very well covered in normal media. Because there's no drama, there's not so many accidents. Actually, when there are accidents, the media cover it, but all these daily breakthroughs are not covered. And we follow that by looking at what is in public databases like Crunchbase and in Twitter and Google Scholar and so on. So drag in data from these databases, we call this labs. And then we look at it in a common format, and then we get these dashboards that show where the world is going. And then we go out to prediction experts, which are people who are creating the technology of the future. So these are scientists and they are entrepreneurs. And each of them, so we try to identify within each area the 20 top people in the world, and we invite them in to become experts with us. And then we ask them to upload at least 3 specific predictions for breakthroughs within what they're working in. For instance, if they work in nuclear fusion reactors, then they have to predict things like when do you have sustained reactions in an experimental reactor? When will such a reactor get connected to the commercial grid and so on? So they combined, they create a timeline of the most likely future that we have. And then we have science editors who look at all of this and tag it. We have 3,000 different tags. And then we have an app. And so you see a little bit from that app here. But that app has all these little dots, and the little dots represent innovations. So we made the whole history of human innovation, also pre-human. So it goes 3.3 million years back. And we have about 10,000 historical innovations. But then we have the predictions for the future. And so we can choose any specific year, and then we can see what the experts are predicting will happen in that year. And that is a part of the overall picture that we have in the venture capital fund, but also what we have in the hedge fund. And then in the hedge fund, we combine that with looking at research from Goldman Sachs, Merrill Lynch, and different research agencies. So this is how we work. So a group of companies that work in different ways. And if we look at what we see of big picture, we see very often big shifts in technology. And I have a graph here that shows something very interesting. I discovered this graph because of Bill Gates. Not that I'm a friend of Bill Gates, but I follow Gates' notes. And then he is a great fan of a scientist called Smil, who goes very deep into studying the history and path of technology and other things. And he made a book where he went really deep into how long time do energy transitions take. And so this is an example of what we are studying and what is relevant both for the venture fund and for the hedge fund. So here, what you see on the graph to the left, you see there's a dotted line, and that shows when the share of a new energy technology has reached 5%. This is because when it has reached 5%, it has a proven product market fit, so it works and it's commercially interesting. And then he looked at what happens the next 50 years. So for coal, after it had a product market fit, the following 50 years, it took 40% of the world's energy consumption. Then later came oil, crude oil, that took 30% in 50 years. Then later came natural gas, that took 20% in the next 50 years. Now people are talking about renewables, and many people are predicting that we should have 100% renewables by 2050. And this is one of the things where when we do our research, we conclude that this is simply, it's not possible, and it's not going to happen because it's not possible. And one of the reasons it's not possible is that there's no geological lack of metals, but there is a commercial lack of metals like copper, zinc, aluminium, and so on. So the miners will not be able to provide all the metals that we need to make this transition at this speed. Also, it takes a lot of volume, and there's a lot of practical issues in making this conversion. So I would think that a takeoff of renewables more similar to what we saw for crude oil is more realistic. And there we have to consider that renewables consist of dams and biofuel and solar panels and wind. But if you take solar panels and wind alone, they constitute today 3.3% of the world's energy supply. If you fly over Denmark and Germany in an airplane, which I do often because I'm a Danish national and I live in Switzerland, you see windmills everywhere. But it's and so many people there think, oh, it's by 2050 the whole world will be solar and wind, but it's only 3.3% of the global power supply or energy supply, and the global energy supply is growing by 2.6% a year, something like that. So solar and wind cannot nearly fill the gap. And you cannot scale dams very much more, and nor can you biofuel very much more. So we need to fill a gap, and that's where we go in and to look at other things. So I think from studying all the predicted innovations that our experts upload, it seems to me that the end game will be largely nuclear power. And there are a number of different technologies in nuclear power. In China, there's an experiment going on with thorium, which is extremely interesting, I think. There are in UK Rolls-Royce factories. They're coming out with scalable mini reactors that are produced in a factory and then shipped to the location, done and finished. I think this is very interesting. In the US, there are experiments with reuse of existing nuclear fuel or nuclear waste, and if that works, then in the existing nuclear waste we could power the US for 100 years at least, possibly much more. But one example that is really radical and, in my opinion, underestimated in the media, also in a lot of research, is nuclear fusion. So today there are about 24 different experimental nuclear fusion reactors. They are in the US, in Europe, in Asia. And the issue about nuclear fusion is that it's massively scalable. So here you have a picture with a person in a bathtub. And the point of the bathtub is that if you fill this bathtub with natural tap water, just open the tap water, fill up the bathtub with normal water. Within that normal water, there will be some heavy water, tiny amount of heavy water. And what we need there is deuterium, which is an isotope of hydrogen. So the deuterium that you will find in one bathtub is enough to power that person's entire energy consumption for everything the entire life. If this is an OECD middle class person, you need to combine this deuterium with some tritium, and you can get that from the lithium from a notebook computer. So you take two small tiny batteries out of a notebook computer. The lithium that is contained in that is enough that if you combine that with deuterium and make nuclear fusion, then you have all this power supply for one person. So the entire amount of raw material that you need is like a small, tiny nut, for instance. That's the size of it, and the amount of waste that comes out is not really a problem, because the waste is helium, and helium is the most common compound in the universe, and we use it to blow up balloons for children's birthdays, and then they inhale it, and then when they talk they sound like Donald Duck. So it's completely harmless. So we have this and other technologies that are coming up that are extremely exciting, and which have enormous potential. So here we have a graph that shows kind of the Moore's law on nuclear fusion. So people have been experimenting with nuclear fusion since the 1950s. And as I click through this graph, you can see there are a number of different technologies: Zeta, tokamak, RFP, pinch, stellarator, spheromak, etc. And each of them have gone through exponential improvement over time. So if we look at the vertical axis, every jump from, say, 10 to the 15s to 10 to the 70s is a step 100 times better performance. So we've gone through tens of thousands of times better performance during this period. And there's a kind of overall Moore's law, which was represented with a dotted line, that shows that we are getting very close to this horizontal yellow line and at the top, which is where a nuclear reactor produces 2 times the energy that you have to put into it. The next red line is you get 10 times more. That's where it starts getting really interesting. And then you have the next red line again, the top red line, which shows the point where it just goes on and it powers itself. And you can see that if this Moore's law for nuclear fusion continues, then we will have commercial nuclear fusion quite soon. So on this graph, I've now removed all these previous experimental approaches and just plotted into 2 different projects. One is ITER in France, which is huge. It's like many different football fields. And so they expect to be up and running, delivering a lot of power, but not in a reactor that is easy to make commercial, because it's not easy to maintain. But then much later, there was a US project called Spark that was started, and that seems to come in much earlier with interesting performance. But then this is like what happens here is something that we see in technology all the time, which is that there's a story. I don't know if you've heard this story. It's not a real story. It's an imagined story. But imagine a civilization where somebody they won't decide to go to a planet which is many light years away. So they build this fantastic rocket, fill it with people, and then they have to stay there for many generations. So they're going generation after generation, they get children and so on. And one day somebody looks out the window and sees another rocket overtake them. So somebody invented a better rocket later, which will get to their planet earlier. And then they think, oh, no, we should have waited. We should not have built the rocket. We should have done more science and then built a better rocket later. So this is what you see here with ITER and Spark. I think that the Spark was started much later, but it's much smarter, maybe. But then you have First Light Fusion. First Light Fusion just came out with an experiment a few months ago. It sounds so simple. So they take this pellet of plastic, which has a little bubble that contains deuterium and tritium. They drop it down from the end of a gun, and it's 1 centimeter squared. It drops down, and then they fire at it with a ray gun, which is the strongest, fastest gunshot that exists on Earth today. And when this ray gun hits the pellet, you get cavity, and then you get nuclear fusion. So such an explosion with such a pellet is enough to power one family with all the energy for all purposes for 4 years. And if you make this kind of reactor and it fires 1 pellet every 30 seconds, so 2 per minute, it can power a city of 4 million people. And the reactor is really small. It's a building of 15 times 15 meters. So this is really, really compact, and you can turn up and down the speed as you want. So you don't depend on whether the sun shines or whether the wind is blowing. So this is something that happens all the time in technology, that when we are getting desperate and we are in trouble, somebody comes up with something really, really brilliant. So in the long term, my thesis and this is what I wrote about also in the book Supertrends, is that we shall never run out of commodities. We shall never run out of resources. We continue to make better and better solutions that are more and more compact and more plentiful. Having said that, and now I look to the shorter term. Having said that, what we are experiencing now in the financial markets and in the general economic situation is the revenge of the physical economy. We are right now experiencing shortage of food, of energy, of industrial metals. And so I have this graph here that shows the return of the physical economy. It's a very simple graph. It shows an index of commodity prices plotted against Dow Jones Industrial Average. And then if the commodities are very expensive compared to Dow Jones, to the equities, then they are overvalued, and the opposite, of course, then they are undervalued. So as we can see, we are down in the really, really undervalued space. And that little uptick we see at the end, that is the commodity price increases we have seen recently. It's like nothing. So I think that this is only the beginning of a period that can last easily 5 to 15 years, where commodities will do extremely well, and where for equity investors to be invested in energy companies and in mining companies is a safe bet, which also has very, very big upside. And there's, so I've been investing for 30 years, more actually, but there was in the year 2000 and 2001, we had a situation in the world economy and in financial markets that reminded me a lot of what we have today. At that time, Jim O'Neill from Goldman Sachs, he introduced a term called BRIC. So that was Brazil, Russia, India, China. And his thesis was that these economies were going to need, first of all, that there was building a huge middle class and a lot of industrialization, and China was by far the biggest player in this, and that this would require a lot of commodities, and that the commodity producers were not ready for that. And so because of that, he thought that commodity markets would go up, and currencies related to commodity producing countries would also go up. So I read that, and at that time, I can't remember, I read in the Wall Street Journal, there was a little table that showed the consensus forward PE for different equity markets, and started with Japan was like really, really high. And then at the bottom of the table, you had Russia at 2. Then I went to the different banks I work with and got all the Russia research I could. And then based on that, it was more like they thought it was 4.3. But 4.3, forward PE of 4.3 is an earnings yield of about 25%. And then if I took Jim O'Neill's predictions for commodity markets, then I thought, okay, the earnings will go up a lot, but a lot. So I invested heavily in Russia, and I started a new company called Beluga, so inspired by Russian caviar. And after that, the following 6 years, the Russian equity market went up almost 1,000%, and the index of industrial metals went up 450%. So this was an enormous opportunity. I think we have something ahead of us which is quite similar. Now there's the war in Russia, and so you can't trade the Russian equities, and people don't want them anyway, but they're trading at a PE of 3 right now, a forward PE of 3. You have the metals and mining companies outside of Russia trading at PE of 6, something like that. But if the commodity prices really do go up a lot, then the earnings will go up a lot, and then the PE ratios will probably also go up. But at the same time, the prices of these equities will go up a lot. So so this is one similarity with the year 2000, 2001. Another one is that at that time you had a massive boom in tech, so Nasdaq, the .com phenomenon, and so on. And value, nobody wanted value shares, nobody except Warren Buffett, so to speak. And then you had at least 6 years where the value shares were outperforming the growth shares. I think you can see that. You can see small caps outperforming large caps. Exactly the same happened then. So I think what we are seeing is beginning to a very large extent of a replay of the investment environment after 2000, 2001. So here's a couple of chart and a table that shows that value shares is actually in deeply undervalued territory. Here we do see how the valuation dipped around 2000. So the value shares were very cheap compared to growth shares there, but they're much cheaper now. So they're really, really cheap. And now it's churning, but there's a lot of catch-up potential in this. And so value, we all know is utilities. It's also actually materials. It's banks, for instance. And I have a chart here that shows an oddity about banks. So normally it's very good for banks when you have high interest rates and you have rising interest rates. And we have lately had a lot of rising interest rates, but the banks have not followed at all. So there's a huge catch-up potential in that. I have a personal crush on Greek banks, which are particularly cheap. I think the Greek economy is finally getting traction for a whole number of reasons. And they have a EU and government project that have cleaned up the balance sheets of banks. So this is a favorite of mine. So if we look at value versus growth again, here we have a graph that shows how long time it took after 2000, 2001 for the growth, for the overperformance of the value stocks to last. And so right now I think we're looking at something that's bigger. At least that's what the graph shows. And so I could easily see value shares outperform until 2028. This is not really a prediction because it's too exact, but 5 to 10 years, something like that. This is a long-term trend. So what is holding back the markets in every way right now is fear, which is based on real economic, rational economic concerns. And this is of tactical importance. And this is where contrary opinion indicators come into the mind, because we all know that if there's a lot of fear in the market, then you have to buy. If there's a lot of bullishness in the market, then you have to sell. So I like to look at a lot of indicators for this. And here's one that shows global growth optimism. So it takes the people who are optimistic about the future growth minus those who are pessimistic. And we can see now that for the period covered in this indicator, which is from 1994, so it's 28 years, we are at the lowest point now. So people are really, really pessimistic. And the conclusion from this alone is that we're probably around a very good buying point, because the other times where it was this low, they were very good buying points. And there's also the concern about stagflation, so the combination of persistent inflation with economic stagnation. This was very high around 2008 in the big financial crisis. We are right about the same level now. And we know that if you had bought shares in 2008, that would have been a great timing. I mean, they went up and up and up since then. Buy when there's blood in the street, as people say. So this one indicates that you should buy now. So I see a lot of people in social media and also in established media talking about inflation getting higher and higher and being, persist like endlessly. I think we've passed actually the peak of inflation. And if you look at these are some graphs from Goldman Sachs. The one to the left shows the inflation that comes from supply constraints categories. So this is, for instance, cars, where there was a lack of chips and because of the lack of chips, there were not produced enough cars, and then the used cars prices went up a lot. You had sporting equipment and many different things, but cars were the biggest one. And so this peaked in February. No, it actually peaked in January. You get the number months later. But if we look at then the graph to the right, this is US core inflation. And core inflation is what the central bank is interested in. They don't care so much about the headline inflation, the official inflation numbers. They care about the core inflation. That has to get to somewhere around 2%. That is their target. And that has also peaked, and it seemed to have peaked in February, and Goldman predict that it will just it'll drop next when we get the next number a bit, then it will plateau a bit, but then it will just drop. And so by the end of next year, we should be down around the 2% that they want. So this is a prediction that indicates that actually we've seen the worst. And we can also see that when we look at financial markets, that they're beginning to price in that inflation will not be as bad as they believed just a few weeks ago. Here we have from Leuthold Group some graph that shows this is the market charts, but this is the break-even inflation rate forecast. The 2-year has the forecast in the market, priced into the market, has dropped from 4.9% to 3.9%. The 5-year from 3.7 to 2.9, the 10-year from 3 to 2.6. So the market is beginning to actually also believe that it's not as bad. It's not going to be as bad as we thought a few weeks ago. But then there's the other question of stagflation. That is, will we have stagnation? So will we have a recession? And some people say we already have a recession, and there are pockets of Europe that has a recession. But the US doesn't. And I say that with great certainty because I follow the Atlanta Fed. They have what is called a GDP Now tracker, and that is updated on average every 3 or 4 days. So it's pretty much real time. And they show that in Q2, second quarter so far this year, the growth rate in the US is about 1.3%. So that is not a recession. But of course, we could have a recession later this year or going into next year, recession being 2 quarters in a row with negative growth. However, the markets are overestimating the risk of that. And they're also, in my opinion, overestimating the potential magnitude of that. So I like this little study from JP Morgan, where they say markets are overestimating recession risk. So they plotted that when there's a recession in the US, the stock markets go down 26%, before the recession typically. And today the market is down by something like 18%, or it was when they put out the research. At one point, it was actually intraday down 20%. And then they say, okay, so this corresponds to a 69% chance of a recession. But this is a very simple model. But they and other banks and other models estimate it's not 70% risk of a recession. It's more like 30%. So the markets are too negative about that. But the other thing is that if you do get a recession, it's probably not very bad. And the reason for this is that you have 2 kinds of recession. You have a balance sheet driven recession, and then you have a consumer driven recession. So the bad ones, the painful ones, are the balance sheet driven recessions. So they come if some part of the economy has a huge balance sheet problem that needs to be cleared up. Worst is if it's something with real estate. On average, every 20 years, we have such a problem with real estate. That's what we had in the savings and loan crisis. That's what we had in the subprime crisis in 2008, 2009. But we don't have such a problem now in any major economy, in my estimation. Could also be problems in the financial sector, but the financial sector, after the financial crisis in 2008, 2009, the financial sectors have become much stronger, more robust, because it's been a requirement by law, mainly. And there's not any indication that companies are critically over-invested either, in my opinion. So if we do get a recession, it's more like a pullback from consumers because of inflation, perhaps. But it will not be, if we get a recession, it will not be a very bad one. So the indication is that the markets have fully priced in what is realistic, probably priced in more. So that indicates that it's not a bad time to buy now. Then you have the bull-bear index, where you ask people whether they're bullish and bearish. And we have plotted that here. And it's a red line that shows the bull-bear index. So when the red line is really low, you should buy. And we had this extremely low point in the 28th of April. And the markets turned there. So the rule here is that when you have a low point and then it moves up, then the markets turn. And it doesn't work always, but it works almost always. But here's another indicator that has worked always. And this is from Goldman Sachs. They have a position indicator. And here we have 7 episodes. And so the rule is when it gets below, there's like this horizontal line. When it gets below that and then turns up again, then the markets turn like imminently after. Just if we don't look at the graph, but look at the table to the right, there I have plotted in the turning point of the indicator when it was low, and then the turning point on Standard & Poor's 500. And you can see the lead from the turning of the indicator to the turning of the market. It was 14 days lead, 3 days lag, 9 days lead, 4 days lead, 5 days lag, 11 days lead, 13 days. So it's very precise. And we have had the indicator really low, and we have had it turn up, and the markets did turn this time. So when this happens, you can get kind of a double dip where it dives again briefly, but it tends to be, it's always been a very good time to buy for a long-term investor. So in my opinion, if you're a long-term investor, if you have like 5-10 year horizon, it's a good time to buy now. If you're short-term, if you're a day trader, it's another thing. Also because valuations have come down a lot. Earnings have been surprising to the upside across a lot of markets during the last couple of quarters. So now you have consensus forward price earnings that are shown here in this table. Around 10, 12 in UK emerging market, Eurozone, and then somewhat higher in the US because it has more technology. So this is how I see it. So to summarize everything I've said, the world will be fine. There are new technologies coming out that replace other technologies. The new ones are amazing. They're often, several orders of magnitude more efficient. So in the long term, if we look 50, 100 years out, the world will be absolutely fine. We're not going to run out of any commodities. We'll become exceptionally wealthy. Probably by the end of this century, the average real purchasing power of citizens of the world will be like 6-7 times as big as it is now. Then if we zoom in, more like a tactical investor, what I said is that the markets remind a lot, in my opinion, a lot of the situation we had about 2000, 2001, which means overperformance of value, overperformance of anything with commodities. Another thing that I didn't mention, by the way, is also that the dollar will begin to fall. And I think in the second half of this year, the dollar will begin to fall. And then the dollar, which is very overvalued against a number of countries, can fall like a lot over a number of years. So typically the dollar, like it appreciates 5 years and then it falls 10 years, something like that. And when the dollar starts falling, if we see that get entrenched, then emerging markets typically do really well. So as me, the hedge fund manager, game is to borrow dollars and invest it in emerging market equities, but with a focus on materials. And then on a super tactical basis, what I argue for is that now is not a bad time to take on risk. Yeah, so that's what I had to say about how I see the world right now.
Yeah, that is so cool. And thank you so much for sharing such good points with us. I found them tremendously interesting and also helpful. For example, you have given us a lot of suggestions in the current market, and also it's a good opportunity to buy if you want to like hold your equity for like 5 or 10 years, as you just said. So if you are watching our 见面Lite now, we are here discussing business and investment opportunities for the next decade with Lars, author of Super Trends and also other 17 books. And do not hesitate to leave any comments or questions on your mind if you want to chat with us. And also welcome to share our 见面Lite to your friends. So back to the fascinating speech you have just delivered, I have several questions on my mind. I will start with the first. So at the very beginning of your speech, I think you have already answered one of my questions on my mind. So because one of the points that I took notice in this book is that you say we will never run out of resources, but because you believe the ultimate resources is innovation. So before, it seems like a common sense, or at least in my view, that the world is facing resource scarcity. For example, we're fighting for clean water, but as you just said, is that as the technology shifts and it's growing faster, so we have this ultimate innovation, for example, the nuclear power you just mentioned. But how do you see the future of the innovation? Do you think the exponential growth of innovation is sustainable? And what will the future of innovation look like?
Yeah, so innovation in itself is inherently exponential. And that is that the reason for that is that I cannot think of any innovation which is not simply new ways of combining what was invented before. And so that means that the more we have already invented, the more new things we are capable of inventing. So it's not like we're emptying the bucket. It's an exponential process that can go on and on for eternity. And so the outlook for the speed of innovation is amazing. I did see there's a couple of books that said that no, the best things have already been invented. I don't agree with that at all. And when I look into the timeline of super trends, what is being predicted by the experts, you have a lot of things that are emerging exponentially, but you also have these really big jumps forward. So the one I mentioned with nuclear fusion is an example. Quantum computing is a technology that for some kinds of computation is not like 10 times better than what the biggest computers can do now. Well, it's millions of times better. And it takes some years to get it work, but we are definitely improving for these kinds of calculations far faster than Moore's law. And nuclear fusion will improve the energy landscape far faster than anything we've seen before. We have, speaking of Moore's law, people have been predicting the end of Moore's law for a long, long time. But just the last few weeks, I've seen news of breakthroughs that can speed up some kind of computations, not with quantum computing, but with other computing, with a factor of 1 million or so. In food production, we see right now breakthroughs in three different technologies that are really important. So the first one is vertical farming. So I calculated that. So I live in Switzerland. Switzerland is about 8.5 million. Small country. It's very densely populated. A third of it is national park. So people live quite close in Switzerland. But if all people in Switzerland were vegans or vegetarians, I know that's not going to happen, but just to demonstrate my point, then you could feed all Swiss people with vertical farms that would take off 0.3% of the land. So that's like nothing. So right now you have a lot of farmland. You could turn that farmland into even more national parks. You have cultured meat, where you grow meat cells in steel tanks. This is a technology also that is breaking through now. You can actually buy cultured chicken meat in Singapore now, for instance. So if all meat production in the United States was produced in that way, you would free up land equal to 6 times Germany, which made into national parks. There's a third technology, which is precision fermentation. So fermentation is, and we make beer and wine with fermentation, but precision fermentation is where go in and genetically modify microorganisms to make them produce something very specific you want. That was insanely expensive 30 years ago, and you would only use it for some very, very expensive medical compounds. That would then, so this medicine would then be incredibly expensive, but that was the only way you could make it. But then it got cheaper, and then people started using it for very expensive cosmetics or parts of it. Then it got cheaper still, and then you started using it for materials. And right now it's getting so cheap that you can start consider using it for food production. So I think that 30, 40 years from now, we will use a lot less farmland to feed the world than we do now. And just for people who are super skeptical, I just want to say that since 1980, we have doubled the world's population, and the average calorie intake per capita in the world has gone up a lot also. So we have more than doubled the world's food production. But you know what has happened with the world's farmland? Nothing. So the amount of farmland in the world is the same now as it was about 40 years ago. So we have more than cut to half the amount of land per capita. But as these new technologies break through, we can cut it by a further 95%. And that will take its time, and for sure that will. I think there would be still, at the end of the day, there will be some farming, traditional farming left, but that would be by choice, because we think it's charming. So I live in Switzerland, so I wear these old-fashioned mechanical watches. They're not, I mean, all respect for Swiss watches, but they are not as precise as my mobile phone. I mean, it was difficult to say. My mobile phone tells me what the time is. I have this for fun. So there will be farming for fun, but the majority of the food production will be made in factories, and it will be super compact and very, very cheap, and will be able to produce more healthy food. And so I can go on like this. So what we are moving to a world of abundance. And I know this is arrogant to say when I live in a very wealthy country, talking with you who are sitting in another very wealthy country. But of course, I know there are lots of poor people, also in the rich world. But if you look at the whole history of the world, I think economically you can divide it into 4 phases. There was a Malthusian phase, which was from the beginning of mankind, so hundreds of thousands of years, where there was almost no increase in the per capita income. Instead, what happened was that when global GDP grew, it enabled humanity to multiply, so we became more surviving people. but the GDP grew at some phases it grew 0.3% per 100 years, so like nothing. Then we got industrialization from around year 1800, and then certainly everything took off. So we became more people, but also on average we became far more wealthy. Around 1980, so 40 years ago, around 40 years ago, there was a distinct shift in a number of countries to precision economy. And with the precision economy, you can make more wealth without using more resources. And you can see that, for instance, in the United States, that the consumption of a number of industrial metals and water and whatnot, pesticides, it flatlined after 1980. So GDP per capita continued to go up, the population continued to go up, but the consumption of resources went flat for many reasons, also recycling. But the core of the precision economy is two things: it's IT and it's genomics, so biochemistry, and where we are really working at the digital level. And when we do that, we can make things incredibly efficient. And this is just spreading so fast into anything. And so this will, for a lot of people, create abundance. And I see more and more people who say they don't want more material possessions. They're fine with what they have. I even meet some people who want less. They want meaningful life. They want purpose. They want experiences. They like to travel. They like to see a good movie, but they don't want more things. And this is the beginning of the experience economy. So, of course, we have all of the things. We have maybe 15% of the world population is truly in the Malthusian economy. That's mainly in Africa. Then you have the industrial economy is, of course, still evolving. And we should all be thankful for that. Windmills are, and electric cars are the industrial economy. But the economic growth is largely driven by the precision economy now. And the countries that will do best are the countries that are best at the precision economy. But some of the most profitable companies for the future are in the experience economy. And so let's take a look at the big high flyers for instance, in the US economy, Netflix. This is not I don't think that is a tech company. They use tech, but they don't develop it really. Not much. They are an experience company. Facebook, yeah, they do develop tech, but it's an experience company. Facebook is Meta, etc. So we were used to that. The best investments were the industrial economy. Then the best investments were the precision economy companies, and next thing will be the experience economy companies. Of course, with lots of exceptions, but that's the way the world goes, I think. But it's a positive story, and we're not going to. I still believe that we are not going to run out of any resources. We will not have any problem with running out of resources. On the contrary, we'll have abundance. And on average, statistics show that the average citizen in the world needs to work half as much every 20 years to buy an average of the 50 most used commodities. So they become more affordable for us. That was a long answer.
No, I really think you covered several points there. For example, the abundance of the increasing abundance here, and also you mentioned a lot of new technologies. And I would say thanks to this technology shifts, and we're going to have this unrealistic fear towards the resource scarcity, and I have a question that when I Googled this book online, I've noticed that there was an early version of this super trends, right, in 2009, and this second version was in 2019. So while the world have been changed completely since then, besides what you have just mentioned, for example, the modern farming, and all this amazing technology shifts, what would you say are some of the most or biggest macro trends that you are watching very closely at the moment, or that everyone should also be watching closely?
In technology, you mean?
Yeah, in technology.
Yeah, there was. It's interesting you mentioned this because the first Supertrends book I wrote in 2009 was with a strict investment focus. So I identified the most promising sectors. And the second one is more technology focused. So of course I did go back to the 2009 one to look for how did it go, and there were generally it went well with what was predicted there. There were a couple of things I got wrong, and for instance the hydrogen economy. I was really not treating it particularly well in the 2009 edition. Now I can see the hydrogen economy is going to, as it looks to me now, will do really well actually. I think the parts of the economy, the big chunks of the economy that are most interesting from a technology transition point of view right now are the energy transition, for one. It's massive. It has really big impact on everything. And the second one is in the food production. The third one is in healthcare. And number four, what everybody knows, number four is in computing and AI. Which of course is such a huge subject, but it's also well known. But there's a little bit, I think that in the three first I mentioned, there are more things that people may not be completely aware of. So if we take healthcare, there are quite a number of areas that are becoming really radical. First of all, anti-aging. A friend of mine wrote a book called Goebbels Age Backwards. It's about anti-aging. And I wrote the introduction to the Danish version, but there he goes through all the different technologies for anti-aging. And so he pretty much concludes that right now you should just live healthy. But he mentions a number of technologies that can reset your age, so actually make you younger. That works on animals, and they work, and it's understood by scientists why they work. So you can change the genome, you can give medical treatments of different kinds, and you can really become younger. Doesn't mean that you can escape forever death, but we are not that far from being able to kind of slow down the aging process, even from time to time reset it a bit, so that maybe 90 is the new 60, something like that. And you see it more. I mean, do people who live healthy actually seem to age slower now than they used to. But that's more because we get more varied food and know more about better healthcare in general. The other thing is the whole medical tracking, self-tracking technology, where if you track your health really well and catch anything that's about to go wrong really early, then you cannot prevent everything, but you can prevent almost everything. So in Nordic Eye, that this venture fund that we co-founded, our best investment is a company called Bella Beat, and they have this women's jewelry that track your biometrics, and they have now more than 4 million subscribers to the monitoring service, and it's just going up. So if you can keep your infection levels down. So inflammation, that's what I mean, inflammation levels down. Then your body will take care of really everything, but you have to find out if there's anything in your body that causes inflammation. And so you apply the precision economy to your body, and you find out, I'm a little bit allergic to this. This is something in my teeth or whatever is bothering me. If I fix that, then my inflammation levels go down, then I age slower, things like that. You also have, for instance, in cancer treatment. I mean, the old days, what you did with cancer was you would have a knife and opium. And then people would have opium, or in the Western movies, they'll drink half a bottle of whiskey, and then you cut off the part with the cancer, and then they'll probably die anyway. And then you got, then we used chemistry, and we still do. So you get chemical treatments, which are very rough to treat cancer. But now you have immunotherapy, where you don't feel anything. You get a monthly injection, and it teaches the body to take care of the problem. And the next level would be that you do a full genome analysis when you're young, and that might reveal that you have elevated risk of getting 3 or 4 kinds of cancer, and maybe also something else. And then you get a vaccine against this. So that vaccine will recognize proteins on the surface of the relevant cells if they ever appear, and then it will take them out. So you will never know that you got cancer. You're just immune to those diseases. So this is precision economy working really to our favor. Actually, you can probably, the whole future of vaccines is amazing because you can probably vaccinate against the most incredible things. So a lot going on there. We did talk about the energy conversion and the food conversion, but just when I look at energy, I mean, apart from the different amazing nuclear technologies, there's also something called blue membranes that use the difference in osmotic pressure between salt water and fresh water, and can generate amazing amounts of power. So it's been very, very difficult to make these membranes big enough, but there's just been a recent breakthroughs. There's ultra deep drilling where you drill down like 20 kilometers down to where temperatures is like 500 degrees. And then you pump down, you put pipes down, and you pump down oil or water, and in a closed circle, it comes up, it's superheated. So you can use that powered by nuclear, powered by windmills, for instance, as a much more efficient earth heating. You can also do it vertically into mountains where it's also super warm. So when in Switzerland, when we drive through the Gotthard tunnel, which is the longest tunnel, it actually gets warmer and warmer while you're driving through. It becomes like a bit claustrophobic. You can feel it's really warm because you drill a pipe in there and then take the heat out of the mountain. But if you drill 20 kilometers down, you can also take nuclear waste, and dump it down there, and then seal it, and then you'll not see it again for millions of years. But why should you? Because if you can use the nuclear waste for nuclear power, then it's probably a resource we should not throw away. Then a third option is to transmute it. And there was a Nobel Prize winner who came out quite recently and said that he believed that we could transmute nuclear waste so that it within half an hour is not radioactive anymore. So there's just so much going on.
That is so cool. I would definitely echo with you with such an growing of technologies that favors our everyday life. And you've mentioned like for food, the energy part, the food production, the healthcare, and especially the anti-aging thing. It's especially appealing to me, and also the computing, the AI things. So most of people, I think they would like take more focus on the computing or AI things because it's have this very close relations with our everyday life. Myself, as personally, I also take specifically notice of the digitalization trends nowadays. So I would ask the following questions related to digitalization. So this kinds of technologies is changing our lives and also creating new business models and also for our lifestyles. So among all these technologies, what are because we can see that the boundaries between our personal life and also work is becoming increasingly blurred, especially a hybrid working from home mode becomes a new normal here due to the pandemic. So what do you think of this trend of digitalization will impact the labor market, and what are the pros or cons for business?
Yeah, let's start by just summarizing some of the things that are going on. The first thing is that that the delivery of work becomes more granular. And let me explain that. So, 99designs.com, where you can go in and buy designs. So this is crowdsourcing, and there are tons of crowdsourcing sites. I've used 99 Designs to make some logos. And you go in there and then you have different people uploading proposals, and they are all over the world, and a lot of them are in very poor places, but they sit there with a computer and make amazing designs. So this is these people are gig workers, so they don't have one employer. They have a number of tasks. You cannot ask such a person, who are you working for? You should ask, what are you working on? And then the answer to that is, I'm working on 5 different design competitions at the same time. So there's this, and this, that things become more granular is because this is because of IT, because of the digital transition. So products like music, everything becomes more granular. I don't buy a newspaper and read it anymore. I get a flow of data from tons of different providers, all granular. So that's one thing. The other thing is this you said about home working, which of course made a huge step up during the COVID lockdowns, but it's not stepping really back down again. And you have employers said, come back to work, and the employees say, we're not going to do that. So this should tell us something. It should tell us that lots of employees prefer at least a hybrid situation, and there have been different queries, investigations by McKinsey and others that show that the people who do gig works and people who work partly or entirely from home, they're more happy, and so they prefer it. It's not without its problems, of course, because it's difficult to maintain a culture in a company where people are not together. The third thing is that it's not really entirely working from home, because people work from wherever they are. I know the former head of Danish national television. He is a very cool guy, but he likes to work from low-end bars. And it's not because he's an alcoholic or anything like that. He walks into very normal low-end bars with his notebook, and he sits in the corner and gets coffee, and then he works. He just likes the atmosphere there. And I like to work. For instance, I've written a very big part of my books in airplanes. And that's because I can't think of anything else to do in an airplane than work. I don't want to watch a movie on this tiny screen with bad sound. So it works. And I'm so focused on an airplane because there's nothing else to do. And I work my daily life when I'm up in the mountains, as I am now in Verbier ski resort. In the winter, I would go up. I get up like 7. I work until 10, 3 hours. Then I go skiing, and I ski until 2. Then I have lunch somewhere up in the mountains. Then I come down. I sleep 20 minutes, and then I work until 8, and then I go out and have dinner with friends. So I get sport. I socialize. but I still put in more than 8 hours of work, and I just find I'm more efficient because when I ski, things, I'm skiing, but I mean, things are going on in my mind, and things I've been struggling with reading about and so on kind of fall in place when I do sport. So I think this is good for productivity. It's also good for family life. Maybe lots of countries, including Switzerland, Denmark, and China, are experiencing falling fertility, and it's not because of biological infertility. It's because people don't want so many children anymore. That I think it would be good that the people who want children find a better way to have them, and this hybrid work solutions definitely can help in that. So I think it's come to stay. Everybody has to struggle to figure out, okay, so what are the downsides and how do we cope with that? But I think it's making life better.
Yeah.
And and I think so. During the hard lockdowns in 2020, especially 2020 was the most productive year in my life because there was less partying, less traveling. The fact that everything could be done by Zoom just saved me so much time. I could just see that we are kind of, it has stuck. People are not saying, I come to Zurich for a meeting, and I spend half a day driving to Zurich for a meeting. Now it's just Zoom or Teams or something.
Yeah, I couldn't agree more with you for that part, because myself, in my own experience, I also feel when I was working from home, I achieved more and became more effective and efficient at home. And I really think that the digitalization process really facilitates a real-time data flow for business and for individuals, and it brings everything more flexible to us. Well, as you have mentioned, is that you are more productive in the working from home mode. So I've learned a fun fact about one of your latest book called Bubbles, Beer, and Bullshit, right? That I think that it only took you 12 days to complete this book. And also you predict the market trends since you made really wise decisions to liquidate all your entire equity investment portfolios since you hold from 2009.
Yeah, I did it. I think it was nine days before the markets crashed.
Yeah, that is amazing. And afterwards, you also predict the short in a market successfully. So please tell us more about what happened then, and how do you predict that kind of investment opportunities for this book?
Yeah, so the predictions and then the book is two different things, but I can comment on both. So about the predictions, I was because my mind wakes up faster than my body. So when I wake up in the morning, I tend to stay in bed for a while, and I take my phone and read emails and look at things until my body is also ready to get up. So I was in bed, and then I saw there was an email from Goldman Sachs with a study, and I opened that study and started reading it, and it was about this Omicron. So no, not Omicron, COVID. And so normally I don't think events like that have any effects on financial markets. But when I read that, I thought, ooh, it's actually spinning. So there were very few recorded cases, but there were in so many different countries that you could deduct from that actually it was super widespread and was impossible to contain. And then a few emails later, there was a study from Bank Credit Analyst, which is a super well-reputed, mega expensive newsletter that is read by central bank managers and hedge fund managers and so on. So I opened this, and they had a study of the same thing with different information, but both reports told me that people are going to lock down the world. And then I called my banks and said, you just close everything with equities, just everything. And And then we went through the week and the markets did nothing, and then they crashed the following weeks. Then what made me buy back was that, having studied the history of the market so much, I knew that the average bear market, so bear market by definition, is more than 20% down. The average bear market since World War II in the US is minus 26%. No, minus 24. And at one point we were down minus 26, and I thought, if the market is down minus more than minus 20% and you buy, you will make money. It's a question, maybe you don't hit it exactly at the bottom, but you will make big money. And when we were down more than average, I thought, let's just ignore all the news, just buy. And then the markets turned and went up. And then came, then gold broke up and silver, and then I also bought platinum and so on. So, but the main decision was made in bed. So this is homeworking. And then about the book, this book required no studies because it's a short, simple book about what I already know. So I was sailing, so I live in the summer on a boat, and I was just sitting there dictating to, you can dictate to Word. Also, this was a Danish language, and it actually works fine in Danish also. So I was just checking that, and I thought, ooh, it works. So I just, in 12 days, I dictated the book. And then after that, I have to say, I spent a month correcting, better and so on. But this is, I mean, I was completely enjoying my time, and I will dictate for a while. And then when I got tired, I went out and was swimming and thinking about what is the next. And then I went up, dictated some more. It didn't feel like work at all. And this is I think that when we work more and more in the experience economy, our work will become more and more enjoyable on average. And I know that lots and lots of people don't have that privilege, but more and more people will have more creative work, or work that relates to things they really like to do, be with humans or animals or whatever. Or craftsmanship, and it enables us to have something that I know a friend who's a former McKinsey consultant. He calls this the quality of life revolution, which is just that we find a new way of mixing work and health and spare time in whatever suits you or whatever suits me. Which is probably different, but that we all find our ways. And of course, in so many ways, politicians, labor unions, company management, families, everybody have to figure out, what do we do about this? But this is going on, and we are finding our way, and life gets better.
Yeah. I'm so impressed at your business and also investment acumen here. But I am so curious that how do you support that trend? You just mentioned you read reports from different kinds of big Wall Street banks, and you also has that data-based labs, as you just mentioned in your speech at the very beginning, and you also have a group of experts that support you. But how can you link them with the investment opportunities? What is your investment strategy here, and what's your mindset when you're facing this changing world?
Most of it comes top down. So most of it coming from looking at really, really long trends. For instance, the graph that I showed earlier that showed that commodities are really cheap compared to equities, and combined with what I know about commodity markets, puts in a trigger. But then I check against the micro information to find out, but is there any innovation that will solve this problem quickly? And I did point out, for instance, in energy, there are several innovations on their way that will entirely solve the problem. However, for the next maybe at least 5 to 15 years, the problem will. and so it's a huge investment opportunity to invest in these kind of legacy companies that deliver resources. But sometimes it can also be something that happens at the micro level that makes me think, there's an investment opportunity here. In Nordic Eye, our venture fund, we invested in a company called WebLife, which is actually interesting also from the work-life balance position. So WebLife, they had a very cool solution to computer viruses. I'll not go into the details of that. So we liked that very much, and we invested in it. And then after just 6 months, they got several purchase offers, and we sold it after 7 months and got our money 6.5 times back, and gave a lot of money to our investors. But at that time, there were about 60 employees in WebLife, but they did not have an office. They had planned to have an office, but they had not had time to have an office. So it was simply 60 people working from home, and we got a lot of money for it. So, but there it was just the story about how they encapsulated malicious software. That was cool. And now I'm invested in another one called Deep Instinct, which use AI, and AI simply detect malicious code, even if nobody has ever seen that particular code before. On average, they stop an attack in 20 milliseconds. And that was just, when I heard that, I thought, that's really smart, because then you can do what is called zero-day prevention. You stop attack by something that's never been seen before. So it's a combination. I'm looking both at the micro level and at the macro level, and of course, I mean, this is quite demanding. But I can only, my personal experience is I can only take in information about 3 hours a day. The rest of the day, it has to be, I have to relax and do other things so that I think about the conclusions.
Yeah, I think we have a lot to learn from you, your mindset, and as well as your investment experience. And you just mentioned that you had a hedge fund with an international focus. For example, you mentioned the Russian market. So are you covering the Chinese market as well? Because China continues to offer huge market growth potential, and China has a skilled labor pool and also unparalleled infrastructure. So what do you see in Chinese market, and what are some of your top tips towards Chinese investors?
Okay, the two things that I find really interesting about the Chinese equity market. The first one is that the decline in the technology shares is now almost exactly the same magnitude as the dot-com crash in Nasdaq in 2000. And they're really cheap, and many of them have massive growth potential and are completely comparable with peer companies in other countries, but are trading at a third or a quarter of the valuations. And so I think for a long-term investor to buy and hold those is amazing. They can be in China, or they could be the red dragons from Hong Kong. By the way, the red dragons from Hong Kong just, they had this falling trend line, and they actually broke that a couple of days ago. So that's a super short-term tactical thing. But then the other thing is that, as we talked about, I'm very bullish on value shares. And if you look at Chinese banks, they as a whole, they're selling at very attractive multiples, like PE of 5, something like that. So it's both in the tech side and on the value side. I see great upside in Chinese equities. I think China it's very important for me to monitor China, not only for the investment opportunities within China, which we are invested in I have to say, and we have increased it recently.
Uh-huh.
But also because when the Chinese economy accelerates, it increases the demand for commodities massively. So you have the commodity demand from what is called sustainable energy like wind and solar is rising about 25% a year. But it comes from such a low level that it still doesn't have a very big impact on the overall demand. What does have a big impact is China. And so if for instance, if the building activity in China goes a little bit down or a little bit up, it has a huge impact on commodities. And I think the most likely is that within the next few years that capital investments and property development will accelerate in China and then bring the next level of the bull market in commodities. And for instance, when we talk about how do you invest in the energy transition, so what comes first to mind in many people would be windmills, because there's a big growth in windmills and it's green. I'm not sure how green it is, but that's personal point of view. But the windmill producers are, as a whole group, if you take them worldwide, not really making money. They're in trouble. But they require a lot of metal, and the metal producers, so the mining companies, are making a ton of money. So instead of investing in the windmill producers, I would rather invest in the mining companies that deliver the metal for the whole electrification of the world economy. So there's a saying now that electrification is metallization. That means that if you want to move to electric economy, you need a lot more metals. Having said that, there's a frequent survey among the executives, more than 1,000 executives from the global automobile industry. And one of the questions that were asked recently was, how do you see the powertrains of cars in 2030, 2040 of new cars? And to my surprise, they had almost the identical answer for 2030 and 2040, which was about a quarter of all new cars would be electric. A quarter would be traditional internal combustion engine. A quarter would be hybrid, so hybrid between those two, and a quarter would be hydrogen. And that surprised me, how high they put hydrogen. But then when I look at the Supertrans expert timelines, I can see all the breakthroughs that are expected in hydrogen. And I think we'll see the first commercial use of hydrogen in our economy will be kind of invisible. It will be in cement factories and aluminium smelters and so on. Then it will go into trains and then trucks, then possibly airplanes, and then come into cars. Hydrogen generally works best for big things, but that they predicted that in 2030, so 8 years from now, a quarter of all new sold cars in the world will be driven by fuel cells or some other use of hydrogen was a surprise to me. So I think this is really an area to follow. And you can make hydrogen in many different ways. You can make it with windmills, with solar panels, with nuclear. You can with natural gas. I mean, so many different ways. But hydrogen has some big drawbacks. It's very difficult to handle, but it has 3 times as much energy potential per kilo or per liter as gasoline, for instance.
Yeah, that is glad to hear that there is still a lot of opportunities in the Chinese market, especially what you have mentioned in your speech and your answers is that the energy and also the banks and the material fields still have a deeply undervalued. So we still have the opportunity to invest. But I think there is not enough time for us. So I will just to go to the last question for today, because our topic today is the business and investment opportunities for the next decade. I think you have already covered a lot in the investment perspective, and I really appreciate that because I really learned a lot. I've been taking lots of notes. Yeah. So I will touch one more question on the business side. So I know you self are a business rock star, and obviously you work closely with lots of business leaders. So would you please tell us some more of your observations about evolutionary organizations, since technology shifts seem to favor those kinds of evolutionary organizations? So what are the main reasons that small enterprises have more advantages in the transition to evolutionary organizations compared to those large firms? Would you please tell us more about that?
Yes, I'm very inspired by a former McKinsey consultant called Lalou, who wrote a book called Reinventing Organizations, which is a very hard read, but he also wrote an illustrated compendium about the same, which I would recommend to anybody. And there he goes through all the different kinds of organizations that exist, and he really just divided into 5. And number 5 is the evolutionary organizations, where you have a lot of small autonomous units that can decide quite by themselves, but they have to be brought to work as a team. And this is something that you can implement within very big organizations. You can implement it within a state. Switzerland works quite a lot like that. And there are some places where it doesn't work. For instance, McDonald's, which have, their raison d'etre, the reason McDonald's is successful is that it's completely standardized and predictable. If you walk into McDonald's anywhere in the world, you should get exactly the same products, the same treatment. So there you don't want a lot of innovation, but in lots of other companies, you do want a lot of innovation. And more and more of the economy is drifting that way. And then you have to adapt your organization forms to what needs to be delivered. And these evolutionary organization models just turn out to be very efficient, but they are also very good for retaining and attracting employees, because when you empower the employees, they tend to be more efficient. An example of a company that does that very well is Spotify, the music service, where the teams are divided into a number of small teams, and every team has very great freedom to implement a change in the software, and then they release the change, but it's invisible to the user. But the software is there, but the user can't see it, so they can't interact with it. They do that just for some users to see if it messes up something. If it doesn't mess up something, then they make it visible for these users. If the users like it and use it, then they spread it out, and in that way, it's not like now we have the next version of Spotify, version 3.07 or something like that. No, it's kind of evolving every day. And that is just a model that is worth really investigating.
Yeah, thank you so much for today. What you brought us is meaningful and insightful, especially at such a turbulent times.
As I said, it's an honor. I meant it's an honor for me to that you invite me to this. So I'm so grateful. Thank you.
Yeah, hopefully we can do this again at some point, because we could have carried on for another couple of hours just talking about how these future trends influence our investment directions. I'm super interested in the market views of the recession, and also in congratulations and something like that, as you just mentioned in the speech. And also, thank you all for watching, commenting, and engaging with us on 见面Lite today. I will say, whatever you do, you need to be ready for what's coming if you hope to thrive. And so definitely check this book, Super Trends, which is available online and in bookstores, because it addresses exactly what we can expect in the coming decades, especially for investors. I think they're so inspiring. And do not forget to continue following Wall Street CN. Please join us on Wall Street CN app, website, Weixin, and Weibo channel. And thank you again, Lars. I really appreciate your time here. And see you next time. Bye.
Bye-bye. Take care.